Welcome to Next Level Trading. I am expecting Monday a flat day. Most of the markets will be closed again on Tuesday. It will be a flat market. I will slightly a less volatility. You would see some sort of a gapping situation, for the most of the commodities. So keep an eye on this on Tuesday and don't take risks too much on that. It might you actually take out and come back again after the gap, okay, but real market volatility was start to take in Wednesday onwards. Now CPI, I wouldn't talk too much about that. Before this news, I'm going to give your analysis on Wednesday, would probably even before 12:30 a.m. as well. You will have the analysis for the rest of the week. They are expecting the CPI number to go down by 0.2% month on month as by 0.8% year on year. Okay, now since they have been keep and increasing the interest rate by 25 basis points since the last two hikes, now this number is going to be very crucial for this time, okay, because if they are planning not to increase in the next few months, then this number can put an impact. Now if the CPI number, they are expecting this number to be 5.2, and this becomes like 6.0 or 6.1 or 5.8, they might be thinking again the hike, okay. Again, I'm not expecting them to bigger this time. They might actually cut down to even 10 basis points, then its number is going to be crucial this time. If any of these numbers become positive and more than the expected forecast, they're expecting the bullishness coming to the dollar. If the de-dollarization is happening, still you are going to see the impact of the dollar. Before even if it starts to go to the downside, you're going to see some strength, the strongest push to the upside before that, okay, because that's exactly what market makers do before they make a perception. When everybody starts to buy that perception, they starts to sell it. That's how they make the money, okay. And when they start selling, you can't, you will see the crushed, because we as a trader will never go against them, okay. That's the main reason I'm warning you, because every time you are selling the dollar, make sure in the back of your mind it's going to push up hard first before it starts to break down for the next few years. So keep an eye on this one. Probably see the structures anyway, and once we see the structures in the next 24 to 48 hours, we can predict the next move with a high probability. So make sure you will attend the Wednesday session. We will be talking about the CPI in that one. Then we have the GBP governor speaking. We have the rate statement for the BOC as well. I'm not expecting any hike from these ones as well. So we would expect sort of a strength coming to the CAD in this week, and that probably would be a temporary stand, which means the CAD alternatives, you would expect them to go to downside first before it comes back up, okay. Then we have a FOMC meeting minutes. This will be important as well. Again, we will potentially be talking about this one in the CPI here. Okay, the CPI number comes more than the expectations, then you might give a hint that FOMC meeting, if they give a bullish end, that the next hike probably would be the start, not this month. Then the month after that, you would see some sort of a temporary bullishness coming to the dollar. Then on Thursday, we have an employment change in unemployment rate for the OZ. They are expecting this number to be negative, which means if this will be the negative, they are expecting sort of a temporary weakness coming towards OZ. Then we have GDP month on month. For this one, again, they're expecting this number to go down. I wouldn't be surprised in that. Again, you must have seen that the IMF has actually reduced down the forecast in the growth for you. So GBP, I won't be surprised if this number is squeezed down and it have an impact. Then we would expect GBP to actually keep on pushing it to the upside as this number starts to drop. But if that change, I will let you know that on Wednesday. So for till today, that the structure says that core PPI month on month, their numbers, they are expecting these numbers to be positive and comparing to the last actual. So if the core month on month PPI will go to the upside, You would expect the GDP number to get better, which means a slighter strong, push to the dollar, and unemployment claims also go to the downside, which is also good for the economy. But if they're planning to drop this one to the downside with a CPI, then this PPI will pretty much push it to the upside. Then on Friday, we have a core retail sales again after this. And if CPI has dropped the dollar to the downside, these two news will potentially give some sort of a bullishness to the dollar, regardless of what they are expecting the last time. It was negative 0.1%. This time they are expecting even further downside. So if that would be the case and we get a surprise in here, you might see some sort of either bullishness or some more downside because of this number, because core retail sales in this way you can actually expect some sort of a GDP, either a favor or have a negative impact on the economy. Retail sales as well. Again, then the consumer sentiment, they're expecting this number to go to the downside. Last time this has actually gone down. They are amended this to 62. Okay, so you can see it here. Always keep an eye on this one. So the latest number was 63.4, but during the month they have actually amended it to the revised it 62, which means they have expecting it slightly lesser than over here 61.8. Fine. So if that would be the case, you must be looking for the weakness coming to the dollar. But in all the cases, I will explain what to you on the structure, what I am expecting in all the cases. Okay, it's going to be an interesting week, but I am not expecting much a movement before Wednesday, and from Wednesday onwards we will certainly see some decent volatility. That's all for now from the fundamentals.